Hi guys, this is Lee with the Market Sense for the week of June 16th, 2020. The charts in this presentation come from the Trade Navigator software that's provided by Gettess, and this is a weekly bond market chart. And you can see after all of this sideways, we had this big down week that seemed to just run out of gas and climax, an exhaustion week I call them, exhaustion bar. And that got turned around pretty good last week and right back up into the congestion area again. Um, this is a little unusual. When you have a break from a sideways period like that, you could normally expect to see a good 3 to 5 bars down out of that. Not getting that, I suppose, could be due to the Fed's support of interest rates, not wanting interest rates to go up and bonds to go down. Uh, but whatever the reason, they seem to be back up there. They didn't quite reach the 178.24 resistance yet. Doesn't mean they can't. They might still go up there. In fact, they might still go higher even. I find myself in a very odd situation because this support right here, right just about at the 173 level, looks really, really good. That looks like very strong support. You've got several things in the same general vicinity there. So that looks like really good support, except that would have them breaking back down out of the sideways pattern again, and that doesn't look good. So that's a very tricky situation there. I kind of want them to go down there to buy them, and then if they get down there, I'd probably be scared. So who knows? There's a possibility that even though they've dipped below it, that they're basically going to hold this 175.28, the middle green moving average there. They may hold that and just stay in this area. That would kind of make sense. Um, but probably the best trade would be to buy in the 173 area, and I really don't want to see them go down there. So that's a very weird situation to be in. And weird situation is kind of the name of the game these days. Last Tuesday here in the S&P, they closed at 3194. And they're only about 80 points lower than that, so not much has happened in the last week, right? Yeah, no, that would be wrong. They've been a total of 270 points lower than that, but this low, which that projected low is 29.2350. The low is 29.2375. Close enough, right? That was actually made Sunday night, and they've been doing nothing but going up. This is, of course, this last bar here is really only 2 days worth of price action. And other than last week, it's bigger than any of the previous 8 weeks in terms of range. So very impressive the way they've come back up here. The difficulty in terms of trying to find something to do is you've got resistance here at around 31.58. They've already been to 56. They could be done. I mean, the high and low for the week might already be in. Now, if there's anything happening, I would expect them to move higher. But boy, you can't really develop a whole lot of probabilities here because they've already traded basically both support and resistance, and that kind of locks me out. If you haven't already had a position, it's hard to do anything here. I will say, having this breakdown last week was kind of exciting. I was hoping they were going to at least continue down to the lower band and give us something. But just when I thought the Fed had agreed to buy everything, they announced they're also going to buy corporate debt, which was another very supportive thing for the market. They're running out of things for the Fed to buy. I think the next course of action is for Congress to pass a law that it's illegal for stocks to go down. That seems to be the direction we're heading here. But this week, if they're going to do anything, they'll probably go higher, but I really don't see a way to buy them and control the risk. So unfortunately, I'm kind of locked out. So that's what we've got for you today. I hope you can find something profitable to get your